Jana Petkanic is the CEO of Angular Finance. She does business development for Warp Finance, and she is an advisor at Digifox Finance. Jana, welcome to Letters from a Contrarian.
Hi, Eugene. Thanks for having me. It is a pleasure to be here.
The pleasure is all mine. To start off, why did you choose to study math, and what did you want to do with your math degree?
As a kid, I was very passionate about solving problems, and I had very good analytical thinking, I would say. Even early on, my parents recognized that, I will never be a lawyer, but I will more be like an engineer or developer. So that was a pure passion. And to be honest, at university, I didn't think much, what will I do when I graduate? I had ambition, to bring tools which will help make certain systems more efficient, because mathematics is a tool, right? And we can optimize many things using mathematics and mathematical models. So I was just focused on my passion, which helped me to be really good in certain subjects like probability theory or statistics. But after graduation, I realized that there are not many good opportunities in my area. And I ended up working for Accenture and Henkel, big corporations, correct? But I still felt that, yes, this is not it, and that I will move on after some time.
How did you first hear about crypto? What was the first crypto that you bought, and how did you fall down the rabbit hole?
So in 2012, a friend of mine showed me how to mine Bitcoin in 2012, and I was like, that's bullshit, To be honest, it sounds funny, In retrospect, all missed opportunity can be considered, you should have done things differently. But to be honest, with the input I had, with my views on the world, I didn't see much value in why would someone build something which would just represent gold, but in digital sense. So I wasn't very, enthusiastic. I thought yes, we have gold, perhaps digital gold will be still of some value over time. But I didn't see beyond, the utility of Bitcoin. But then in 2016, when Ethereum was picking up, I realized that, wow, Ethereum, is almost the same as Bitcoin, but with a smart contract framework. In very, basic terms. And I was like, that's interesting. And that was what got me into crypto, realizing that there is so much potential with programmable money. But I only fell down the rabbit hole in 2017 when I saw a presentation of Bernard Lietaer. Bernard Lietaer, he was a president of a bank or foundation, but he was also a co-creator of Euro, our currency. And he was a big proponent of resilient systems, meaning that we have one monetary system, right? It is like one currency. Systems usually pegged on the success of one asset are not very successful. And he was bringing up example, right? When you have a monoculture in nature and there is some storm, entire monoculture is down. But diversifying the system makes it more resilient. So he was a big proponent of complementary currencies. And to be honest, when I saw that talk, because he was then following that complementary currencies weren't possible with the technology we had in 70s or 80s. But now with Ethereum and with all the diversity we can introduce, it's completely different game. So that was for me the big thing, which I realized, wow, actually, that perfectly fits into, current monetary system potentially. Diversification in some sense. And also, since my teens, I was very interested in certain social causes, right? And usually when you have NGO or when you are just trying to solve certain social cause, you usually struggle with money, right? Unless you are funded by Soros. But my thing was that here with complementary currencies or with Ethereum and tokenization, we have a big opportunity, to reward people for the good they are doing in this world. So in 2015 and 16, I had NGO where we were fighting the food waste. But NGO eventually never scaled out because we couldn't figure out the business model. But then later on, like with Ethereum, I mean, I never get back to the NGO, but now I see opportunity how we can improve on that side. And yeah, you ask what was the first crypto I ever bought, but I have to say I earned my first crypto, and that was Bitcoin in 2017. And then later it was Ethereum, and through that I expanded like to amazing world of shitcoins. I don't use term shitcoin as offensive. I think, yeah, like shitcoins describes like all kinds of assets which we have in the market at the moment, right? But I think when we'll be sitting like this in 10 years time, I think we'll be able to enjoy the benefit of many assets which will make it up until then. So I'm very excited for that.
Before I ask you about how you evaluate shitcoins, did I hear you correctly when you said that one of the creators of the euro was the person whose talk convinced you that Bitcoin and wow, okay, that's so interesting. Why did he choose, do you know why he chose, what's his name again? And why did he choose Bitcoin or an electronic currency to help stabilize the Eurozone as opposed to like the US dollar or some other currency?
Yeah, so his name was Bernard Lietaer. And when you look him up, he was a very successful manager of a hedge fund in late 70s, I think. And, he was co-creator of Euro. That means he was, I think, in 70s, 80s on the Ministry of Finance in Belgium. But back then, when he was trying to say that Euro should be the complementary currency to national currencies, when it comes to technology used, we didn't have even any credit cards back then or debit cards. It was very difficult for everyone who was involved in the concept of euro to think about, okay, what will the people do? Will they carry around two wallets? Will they, at the cash desk, will they be able to pay in two currencies, the national one and the complementary one? So effectively, his idea got rejected. But also he wanted to introduce, he wanted to keep the national currencies and introduce euro as complementary currency. So that's the reason why he didn't think of a dollar as additional layer of diversification in the Eurozone.
Gotcha. Shitcoins. How do you value a token or crypto project, including shitcoins, and what math do you use? Mm-hmm. Or do you use math at all, or do you just look at like community involvement, et cetera, et cetera?
Mm-hmm. That's a very interesting question because the sentiment around token economics has changed a lot. So I remember times in 2017, everyone was obsessed, we need to come out with the best token economics model so our coin performs very well, right? But that was a big misconception many people had back then because model is important. I mean, that's you cannot deny this. But what is more important is the community engagement, is the liquidity of the token, and obviously other parameters. So token economics, I remember back in days, like in 2017, equation of exchange was it was like a holy grail of cryptocurrencies. Even I had like some model built around the equation of exchange, which we're then presenting to certain clients. But you could see the flaws already of the model. So by now I can be confident in saying that I'm very happy to see that we moved from the equation of exchange as the core model and we shifted to more like, is it a governance token? Is it a platform token? Is it, few categories of token? And based on these categories, we have now certain utilities and roles of the token, which help drive the community engagement. And hence, based on the community engagement, based on the cliffs and vestings, we can then evaluate and anticipate certain price increase or price drops. So to be honest, yes, I have to say there is some mathematics involved, but it's nothing too advanced, You don't need partial differential equations to come up with interesting models. So that's very interesting. And when it comes to valuation, initial valuation, I also have to say depends. It's not much about the token, but how big is your team? What is your product about? What is your go-to-market strategy, and so forth. So I'm happy to announce that I just closed a raise for Angular Finance, and our initial valuation was based off of these parameters. You know, we have very interesting product. We are a great team. Our go-to-market strategy is also so that there is no mathematics behind it. Like there is no formula which you could refer to as a holy grail, where you input parameters and it throws evaluation.
And how would someone who wants to learn more about these different types of tokens and learn more about evaluating, is there a resource that you could point them to where you could say, yeah, if you want to learn more about how to do this, then you can go read this?
That's a good one. There are many resources and none, I would say, because many resources from different content creators. So it's very difficult for me to point you to a particular resource. Because it's important to say that many of the token models now, they are, I wouldn't say they are proprietary per se, but usually projects when they launch and they have certain novel token model, they try to keep it they announce to community only when they are before the launch, right? Because as we saw with many innovative projects in the space, they tend to get forked, something would get improved, tiny bit. And that's how the liquidity can shift from protocol to protocol, even though you were the one who invented. So, I cannot tell, I cannot point you to a single source.
Fair enough. Congratulations on raising the round for Angular Finance. That's awesome to hear.
Thank you. It is very interesting journey. I'm very happy that things went this way, and also I'm very passionate about helping other startups raise funds, but more in the advisory role, as mentioned at the beginning. And raising money is a bit of psychological game, correct? Because when you are early stage startup, you need a certain level of credibility. And obviously, you need to be very confident about how are you going to deliver the product. So, for instance, in this race, I spoke to around 85 VCs within the time span of 2.5 months. So that was, for you as a person who is trying to sell something, when you are talking so much about your thing, the big risk is that over time you may lose focus and you may just go okay, tell me what is your go-to-market strategy. Sometimes you don't even realize what you are talking about. You just talk, right? And that's very wrong because you have a fresh person in front of you. You need to sell your passion. You need to sell your credibility. So you need to stay focused. And that sometimes this is very challenging.
Right. I went to a Meetup / networking event a couple of weeks ago, and there were lots of VCs there, angel investors there, and it seemed like it was there was nothing I could provide of value to them when I was talking with them. I just went there to meet people and entrepreneurs and see what was going on, and it was like a different world when I was speaking with the angel investors and the entrepreneurs. It's like they run by different, it's like a different situation, a different world. Have you found that have you found something similar happening with you? And do you have any tips on avoiding any of the stress or getting used to that world? It's a very vague question.
Yeah, definitely. I do have few recommendations and few tips to follow. One of them being that move fast. Because sometimes when you are chill and you have a list of 100 VCs and you think, okay, I will take 10 for this week, 10 for next week. No, try to do 100 on the first week. Of course, you won't be able to, right? Because you need to reach out, you need to connect, you need to schedule meeting and so forth. But what I want to say, if you have raised, try to move fast because things will get extended. Investors, they have certain internal timelines. So many investors, they cannot get back to you earlier than 2 weeks, let's say. And you cannot wait 2 weeks, So that's very big thing which I learned over time. And then a second, as I mentioned, stay focused. Like try to realize that here is a new person you are talking to. And okay, you are perhaps presenting the same product for the 65th time, but sell it as if you will be as passionate as on your first talk. And the third thing which I would strongly recommend is definitely know your product through and through. There is nothing worse when you are asked a question and you don't know the answer to. Obviously, if you have business background and no technical background, it's okay to say, okay, I need to speak to our CTO to get back to you on these details, or I'm happy to set up a call with our CTO. But when it comes to essential things, that can backfire really bad. So,
got you. Okay, and would you be able to walk us through how you would set up a pitch deck for a fundraising?
Mm-hmm. Yeah, definitely. So pitch deck is a very interesting thing. So as we will touch on later on, I was doing events, and I have to say in those 5 years I work in crypto, I have seen around 200-300 decks, and they are all like early stage decks and like decks of early stage companies, or perhaps some of them they already have product and stuff. But I have to say it's interesting to see that yes, there were numerous decks with a big ambition to raise millions of dollars. But to be honest, only 10% even follow the standard procedure of how to set up a deck. Because you do have standards, like there is a certain order of slides and certain story build up you should follow. Because investors receive hundreds of decks in a week. And when they cannot find the information they need, while scrolling your deck, they will pass. It's a clear pass. So pitch deck is something you should put together. Sometimes it can take you even a month to put together 20 slides, right? So the proportion of time and the result is something which you as the founder may not be happy about, but bear in mind that this is the platform which is selling the product. So I would definitely recommend following the standard structure, that you have a problem, solution, then slides dedicated to the product. What is the product about? Then go-to-market strategy. Go-to-market strategy actually is something which I've also neglected in many decks. And this is actually something which needs to be put emphasis on. So definitely go-to-market strategy. And then later on, if you are tokenized product, obviously token economics. But here what we mean is usually token allocation breakdown and vestings for investors, for team. Incentives shall be aligned. So for token economics, few recommendations. Stay away from wild allocations like 40% to investors in the first round. I think we are past those times. Like you may raise that money, but you won't get community engagement, because the transparency in cryptocurrency enables everyone to take a look at your token allocation breakdown, and retail investors, they can see through that, this token economics doesn't work for us, but for the VCs, right? So try to keep the happy medium. And then definitely in the deck, what needs to be covered is partnerships, if you have any. Because if you are early stage product, very important is team. So if you have enough knowledge and enough expertise on your team to actually build out and deliver the product. And the second, when you have partnerships, that's a cherry on top. Because that means that there are already people who trust you, who want your product to be integrated, and who will help you to reach the go-to-market strategy you plan. So that would be very rough outline. Keep your deck under 20 slides. Many people recommend 10 slides and so forth, but it depends, because sometimes you can have information heavy deck where yes, it's 10 slides, but it's more text on the slides, then it would be nice, So I would say like between 10 to 20 slides, definitely. And make sure you use solutions like DocSend. So you upload your deck and you share the link. So that's the way you can trace who has viewed your deck and for how many minutes. Because if you spot an investor who was viewing your deck for 10 minutes and who didn't follow up, I think it's very valuable just to reach out to them and ask like, hey, like, you have any feedback or you want to hop on a follow-up call and so forth. It's very valuable. Never send PDFs around and never send PDFs with a 30 megabyte size or something.
That reminds me so much of something I did in my old job where I would send out cold emails to hundreds of podcasters, and like my boss was fine with it, but I didn't like how spammy it felt. And then I realized that I actually had data on how many times someone opened up an email, and I started to only email the people who had opened up the email. Sorry, I started to follow up with the people who had only opened up the cold email like 3 or 4 times or more. And it was just so much more successful because I knew that they were interested in the product that we were putting forward. And like, why else would someone open up your email 30 times? And it's a really great strategy for success. So I've never heard of DocSend, but that sounds like such a great idea.
Yeah, definitely. It's a very useful tool and it's pretty inexpensive. So I always recommend that one.
Got you. Okay, so you have 10 to 20 slides. You have, less than 20 slides. You have a problem, you have your solution, you have your product, you have your go-to-market strategy, you have your token allocation breakdown, you have stuff about your team, you have your partnerships, and you answer any questions.
Yeah, definitely. And also when scheduling calls with investors, keep it 30 minutes for an initial call, never an hour, and never 15 minutes, that may be too short. 30 minutes is a good one.
And why not too long or too short?
So too short, you may miss opportunity to ask investors questions. So you'll be able to present your product, but it's important to realize that when you are raising money with a purpose, right? It's not only cash. Forget cash. Cash is easy, especially in these times. But it's the brands you want to land. Because imagine you will close like really big investor who has who invested in the startups who can be your customers. So that's an instant user acquisition there. So you need to think strategically, okay, you are raising this amount of money, but who do you preferably want to see there? And therefore, in the first call, like when you keep it 15 minutes, you may be able to present your idea, but you won't be able to ask questions. And if it's longer than 30 minutes, it's a bit considered like a sign of disrespect, because time is valuable, time is money, right? And if it's only exploratory call, so it's not a follow-up, but the first one, you want to keep it like short and you want to save time on both ends. Right.
Got you. Okay. Did you have anything else you wanted to add to that before we moved on to blockchain talks?
No, not at the moment.
Okay. Blockchain talks. Could you tell us about what that was and how you started it?
Yeah, definitely. So I mentioned that in 2017 I saw the talk of Bernard Lietaer, and it clicked with me, and I was like, I'm full-time in crypto. Well, I want to be full-time in crypto, but I don't have any network, and I don't know what to do. I had a math background, right? But I didn't know where to start, and crypto, it was just, it was already very diverse. You could do so many things, like from being a developer to designer, this or that. But I still wasn't sure like what would be the best for me. So I set up a series of monthly events in Amsterdam called Blockchain Talks. And the first event started in October 2017. Actually, it was October the 30th, which is a Bitcoin white paper anniversary. So, or excuse me, 31st, if I'm not mistaken. And that was very interesting. So yeah, effectively blockchain talks events, they took place from 2017 and they finished in 2019.
What was the absolute first one that you had in October, and what was the most successful one that you had?
The first one was hosted at a film museum in Amsterdam. So it's just across from the train station, across the canal. It's a beautiful venue. We had around 100 people on our first one. And it was a big success. We received a lot of positive feedback. I was very happy. The event was around 3.5 hours, so it was a bit lengthy for hosting 4 speakers. But I also wanted to, have intro talk, meaning we had a presenter talking about what is blockchain, what is Bitcoin, and these kind of things. But all in all, things went well. So that was our first event, and the most successful event was in November 2017, so a month after. We had around 250 people. The venue was packed, we were sold out, but bear in mind that was still when the Bitcoin was going up, right? And everyone thought it was, to be honest, the bull market vibes when you are event organizer, hosting offline events. It's the best. That's like, it's like watching Super Bowl or being in a Super Bowl stadium, like all those like emotions you have.
Yeah.
Oh my God, I felt like, yes, that's so. When it comes to, like financial aspect of this, obviously like the early events, we broke even. So it wasn't like money aspect, but to see like the energy and the speakers being happy and everyone networking, that was very rewarding.
I'm asking these questions because I want to host something like this in my city, Calgary, Alberta. So 100 people for your first event seems like a wild, absolute success. Like, that's incredible that you could just pull that off. How did you market the event? How did people find out about it? Why did they decide to come? Was this all by yourself?
Yeah, so to market event, that was very difficult, to be honest, because we leveraged meetup.com as a platform a lot. And I think most of the traffic we got in the first days was through there. The second was I spent the entire summer 2017 going from event to event and networking and telling people what we are up to in Amsterdam and they shall come over, attend our events. But definitely meetup.com worked very well back in the days. I don't know after pandemic how are they doing now, if they are still a major platform over there, but definitely that was very interesting. Also important to say, our very first event was free of charge. So that is another aspect of meetup.com. When you have, let's say, 300 RSVPs, you can say that perhaps 100 people will show up. So that's a bit downside of meetup.com as a platform. Excuse me, your second question was?
I kind of threw them all at you. So let's see. There was, how did you market the event both in person and online? You answered that. Did you do this all by yourself?
Yeah, that's important. I had a co-founder. Her name is Valeria Ferrari, like the car. And we met in April 2017. We met actually when I was watching the talk of Bernard Leitire, because it was in an offline event in Amsterdam. So she is doing PhD around law and blockchain in Amsterdam. And we just started those events together. And over time, it was still bull market, let's say so starting October 2017 until I think February 2018, we still could leverage, the bull market. But to be honest, March 2018, April, those months, Eugene, were the worst. Like, when you see that you were once up here and now you are at, fraction of what it was, that was a bit depressing. But, it was me and her. And then over time, we got around 6 to 7 volunteers. Obviously, we also had people like we contracted photographers or people who did live stream, like professional one or catering or this kind of things. But 6 to 7 people part-time who were of a big help.
I see. How did you know who to trust and who not to trust? And did you have any competitors in Amsterdam that you crushed into oblivion because your talks were the best?
Yeah, that's a good one, Eugene, because, I entered crypto, and it's important to say that crypto is, it's about finance, right? Finance as such is very different environment that what you experience when you work in other industries. It's a very male-dominated area, right? Which is very something to learn how to navigate for a woman. And the third, it was crypto. So that added, like another layer of, you need to take into consideration these 3 things when you want to figure out who to trust and who not to trust. And to be honest, I came from very good environments, like when I was studying and then I was working. My life was very, very stable. And I only got to meet like nice people and, what I want to say here is that I trusted everyone. I trusted everyone from the second one I met them, unless they were obviously something was wrong with them. But it's very important to say that in crypto, you learn also how to build up the filter for people, and a very strong one. And you also learn how to navigate it. Yes, like that person who has been working with you for like years, one day they will just completely change their minds, and they will walk away and they will screw you over and stuff. So I'm not saying like crypto in general is bad, but what you see on Twitter sometimes, the drama we have there, what you see in the media, the stories you hear, that's all real. And why is that real? Because there is money and profit involved. Everyone wants to do the best. And if someone sees that, okay, like they don't need you anymore, then, you get screwed over. So, that was, I have to say, and I have to put it bluntly, that was the most difficult thing I had to learn about crypto, how to navigate it. All of a sudden someone is scamming people with intention, right? Recently we saw the drama around Sifu. So Sifu, he's from a certain protocol in the space, and it turned out that he's a co-founder of the Canadian exchange Quadriga, which Quadriga CX, which exit scammed, we can say, a few years ago, right? And to be honest, in traditional finance, story like this, the person would be in jail. And now in crypto, it's perhaps he will create another anonymous profile and he will become a CFO at another big protocol. So crypto has certain specifics which one has to learn, because otherwise you will not survive. I know actually many people who left crypto because they couldn't stand the people's mentality. It's very sharky in general. So also for the context, the first job I had in Amsterdam in crypto, because I was doing events, but events were monthly events, so it took up, let's say, 10% of my time. So I had a job in July 2017, and it was a scam. It was a crypto job in Amsterdam, and imagine it had office, very nice office. I had colleagues. I signed the labor agreement. 2 weeks in, the manager stopped showing up in the office, and I was like, what's up? We are here, working. And we launched the cloud mining service, and we got those questions like, where are my payouts? I paid for the contract, and then I want my payouts, And Eugene, the manager, he stopped coming to the office, and a week after, we learned that he fled from the Netherlands. And that was a real story, and I was like, wow, but at least can I get my salary, please, someone? And I only got compensation, I think a year after, because there was a trial, because it turned out that he scammed many people for around $100 million. And it was for him the time to actually flee, And that was my very first experience. So I have to say, when it comes to trusting people, it set bar pretty high, and I was like already ready for more stories to come like this. Yeah.
Is developing that filter for sketchiness and sharkiness something that you can only learn the hard way?
Depends on what kind of personality you are, because some people, they tend to have that filter since, let's say, even in childhood, you can recognize like some people are better at reading other people, right? And some people are less, some people more trust other people. But when it comes to crypto, I think it's just, if you are a good person and you don't have any experience with anything bad happening to you, right? Just keep in mind that if something like that happens, that the protocol rug pulls on you, or that your token will drop 90% because founder cashed out or something, these things, don't take them personally, obviously. But the second thing, always keep in mind that it can be you who is the victim. It can be anyone. I mean, there is no... crypto, it's really, don't take things personally and move on. Never try to, unless it's hundreds of millions, right? Never try to sue someone or something. It's usually, it's usually not worth the hassle. And moving on is the key when it comes to events like this.
I see. Wow, that was dark. That was very dark. Wow. I mean, well, one of the promises of crypto is that the transparency that comes from the blockchain and things like that helps to create a lot more trust. And it sounds like it assumes selfishness or self-interestedness from everyone involved. And that's how everyone starts behaving in the space. And it also seems like money has this warping effect on people where they start acting differently around it, and it seems very dark.
Mm-hmm.
Okay, let's go back to blockchain talks. Competitors. Did you have competitors in Amsterdam for like building community and talks as well?
Yeah, definitely. And actually, my recommendation in general would be, if you are in certain area and you know that there are certain events, don't try to create competition, but try to help them or try to join them, because the more the merrier, right? But here I have to say that I tried working with them in some capacity, and I was a big fan because they are pretty old event. They run from 2013, I think, every month. But effectively, we didn't agree on many things, so I moved on and I started my event. So they were competition, but I also have to say, blockchain talks, we had catering, we were very welcoming, and we had a few unique selling propositions, which I have to say, I wouldn't see those two events as a competition, because as we'll speak later, we had certain concepts in our events introduced, and difficult to say. I think you can consider them being competition to some extent, but if you manage to go for a good user experience or something what they don't have, right, then obviously you win in the end.
Okay. How did you get partners and sponsors and speakers? Let's start with partners. No, let's start with speakers. How did you get your first speakers to come to that October event?
Mm-hmm. Yeah, definitely. So it was my network. So in summer 2017, when I went to certain networking events, I was already, hinting to some people that we'll be organizing this event, and it would be cool if we could connect and if you could come and speak. So definitely that was personal network. But over time, I have to say Amsterdam as a town which created the first stock exchange in the world. So in 1602, there was the first stock exchange ever created. So Amsterdam is still seen as this like a core of finance in Europe. So because of Amsterdam, we didn't have any issues to invite any speakers over time still. And the second value proposition is that apart from offline audience, we were also live streaming, and sometimes on the live stream we would have like hundreds of viewers. We would live stream on Facebook, so that was easier. And many speakers over time, they saw also value in connecting with local community or other speakers. So that was how we managed to attract speakers over time.
Got you. How did you get partners and sponsors for the talks?
So definitely it's the numbers you are selling here, right? So partners, if they are retail oriented, they are interested in how many visitors you have on a monthly basis, how many online viewers, is there any Telegram, is there any Twitter? So effectively, what are your channels which they can monetize on? And there was a pretty solid interest. Obviously, interest is heavily correlated with bull markets, so market sentiment in general. So sometimes it was like easier, sometimes it was more difficult. Also, one important thing, I never wanted to have sponsors pitching in our events. I didn't want our events to turn into this shit show, so to speak. Because I wanted to, no one likes to listen to some commercials or sales pitch, right? So I was very clear on that. And many sponsors, they were actually very fine with it.
Okay. What events did you have at the actual meetings themselves? So I know that there were people who spoke, but did you have, what other things happened?
Mm-hmm. Yeah, definitely. So we had, I think the most successful and the best sub-event in our events was the ICO Shark Tank. So as mentioned previously, I was very careful about what kind of content do we have, right? But it was very difficult to explain to ICOs that they only shall inform the audience and not to pitch. Obviously, we are not going to take speaker off the stage when they start pitching their product, right? And many times it would be, in those 2017 and 2018, early 2018 times, sometimes speaker would have 3 slides about product. And then here is our token, buy our token. The token will do 100x in half a year or something, It was very cheap, right? So we introduced ICO Shark Tank because we really wanted to have feedback from, it worked like a Shark Tank, like the TV series. So you have certain professionals asking questions. And sometimes it got really intense, right? Because many projects, they would have many flaws which they would be asked about, right? But many times they didn't have any answer. They would just say, this is a problem we have here, right? But one thing, for the sake of transparency, I was very clear with speakers what they will experience. And I also sent them our promotional video where they could see that sometimes it can get really bad, right? But many speakers, they were so confident in their product that they were I will be able to answer any question, And many times, a few minutes in, they would I have to say, yes, some people can see this, but you made so many enemies, And I have to say, well, I made a few enemies, but I made hundreds of people happy because they could see the feedback, they could see, yes, that was the flaw, and I'll be more careful when investing next time if another project doesn't have the same flaw, So, I made a few enemies, but it's the value for the audience, which mattered to me a lot.
You have very thick skin, Jana. Wow. Other than Shark Tank, you had something called Beer to Beer based on the website, and that was just a networking thing afterwards?
Exactly. Yeah, I was just trying to think of a fancy name for our networking session, and because of peer to peer, beer to beer, was a very cool name. Yeah.
That's cool.
And then and one quick thing, we also had a battle. So battle was usually a certain polarizing topic in the space. Back in the days, we would have Bitcoin Cash, or we would have permissionless blockchains, right? So in Bitcoin Cash, we had Ton Weiss on Bitcoin side, and we had Justin Bonds from Amsterdam, from Cyber Capital, on the Bitcoin Cash side. And that was structured according to traditional like setup of a discussion, that you would have certain intro, then bringing up like arguments, then the rebuttal, and then closing remarks. And everything was timed. So that was how like the debate Bitcoin and Bitcoin Cash was, I think it was one of the best content we produced over those years, because it was interesting to see certain big influencers like Ton struggle, you know. So that was very interesting battle. I think now we would also need battle, right, for certain topics in DeFi, but yeah, perhaps one day.
In Calgary, most of the people here are Bitcoin maximalists from the organized communities that I've seen, and you can tell when someone's a Bitcoin maximalist, of course, when they go, everything other than Bitcoin is a scam. And I'm very tempted to maybe have a debate in our event where it's like Bitcoin is, or Ethereum is not a scam, or a debate topic like that. And I think that would be fun. Debates are very fun for sure. Okay. Let's see. What were the consequences of hosting the event? What did you gain? What did the sponsors gain? What did the attendees gain? And what did the speakers gain?
So what I gained was a burnout. Yeah, I'm just laughing. I mean, it was definitely the network, right? But I had to quit events because I got a burnout. And the burnout was, I usually get burnout when there is not much to do, right? And, or things don't go well. And to be honest, in 2019, it was already second year of a bear market, right? So I experienced the peak bull market, and then the sentiment dropped. And 2019 was very weird year where there was not much happening. There was some DeFi emerging, but it still was nowhere near what DeFi summer was in 2020, right? So 2019, yes, there were many products being built and stuff which raised money before then. But I wasn't in that lucky position that I could say, oh, like here I have this product which I'm working on. But I was doing events and I had a few consultancy jobs and I was advisor. And I have to say, doing offline events in a deep bear market is very difficult thing, because market sentiment is so low that sometimes, you know, you put, let's say, in simple terms, you put a lot of effort with almost like no outcome. So, you know, we would have events set up for 150 people and we would get like 7 people showing up in the end. So yeah. I decided, it's definitely not worth like doing this. And also I had burnout. I was just like, man, like, where is bull market? Someone give me the bull market, please. Right. The sentiment was very, very bad, yeah. And then, so that's what I gained, but yeah, it's network, right? And the second, what attendees got, as I mentioned, I was very careful about the content and I was very caring about the audience. So I think, I mean, I cannot speak on behalf of people, right? But I hope that they got the most out of it, meaning when it comes to knowledge and when it comes to, you know, sense of evaluating projects. And I hope they had a very good time in our beer-to-beer sessions, and I hope they had a good experience. And for speakers, I know many speakers connected with many people from our audience and they ended up working together. So that's something, I wasn't protective anyhow. That, yeah, like, I need to monetize this connection or that connection. There was also substantial investment, to my knowledge, like flowing to projects, you know, based on the presentation in our events. So I was very happy to see that. But so that would be for speakers. And for partners, they definitely got some exposure. And also we helped certain venue in Amsterdam. It's actually Seats to Meet venue in the oldest stock exchange in the world. So that is in Amsterdam. We had our events there, and I guess we helped them a bit with exposure, because I was checking there are still some crypto events hosted even now. So I think they got visibility in some way. It's a beautiful venue right across from the train station, but on the opposite side, not across from the canal, but to the city. And that was very beautiful, yeah.
When you were getting that venue, did you get it for free? Did you have to pay for it? Was it like a sponsorship / partnership thing? How did you score that venue?
So it took us, I think, a year to establish in that venue because I didn't know about them, right? And we had a few venues. So as mentioned, we were hosting at the Film Museum. Then we hosted at a few little venues in Amsterdam. It was mostly commercial based. So they had their fee, which we had to pay, and that was it. With that particular venue, we agreed on a long-term partnership, and there was certain discount because we signed up for a few months upfront. But it still was challenging to settle costs while in the bear market. But
right.
Yeah.
Okay, that's good to know. Because, well, the bear market issue, I don't know if we're really in one right now. It doesn't feel like that to me with the people that I speak with. But I think that in a bear market, it might be just better to have, like, instead of meetings and events, we would have like crypto socials where it is just 7 to 10 people who come, and that way you don't burn yourself out, kind of thing. Anyway, those were basically all. Oh, one last question. So there's an issue, which is the chicken and egg problem. Your attendees come because they want to see great speakers and meet other people. But the speakers only come when they have attendees there. Partners only come when they see that you have channels on Telegram and Twitter that are active. But then people don't follow the channels unless there's something that you have from the speakers. How did you solve that chicken and egg problem?
Yeah, that's interesting because, to be honest, I never experienced. I think it was, as I mentioned, many speakers like to come to Amsterdam. Also, it's very accessible, right, because of the airport. And the second I think people just like the branding, and they liked me, I think, as a host. And they liked the idea of presenting in front of like Amsterdam community. Actually, Dutch community by numbers, it's I don't know how many percent of the country has bought crypto, but it's a significant percentage. But back to the topic is, I have to say I never experienced that chicken egg problem because somehow, we had speakers flying in from the US, from South America, from Russia, from Asia, and they were fine flying in. Obviously, like they organized other events in Europe, but that was very cool to see that, speakers, like they were so committed to presenting their projects. And many speakers, they gave me like plenty of positive feedback. So that was very nice.
Okay. All right. Did you have any final thoughts, suggestions, advice, podcast recommendations, book recommendations, anything like that? Yeah,
definitely. Well, I mean, when it comes to recommendations, as I mentioned, I don't like to point directly to certain resources, but when it comes to crypto in general and why it matters, I think in long term is that, to me it's still amazing that place of birth determines how accessible is finance to you. So for me, realizing this one alongside with the complementary currency theory by Bernard Lietaer, so these two things were for me like, wow, like, how come place of birth can be so limiting to you as a person that it determines your entire life, And alongside that, we have many people in the world, like, imagine there are many people in South America who are as skilled as me or you, right? But unless they know crypto, they are victims of the monetary system. And I have to say, I would like to invite people and the viewers here, just be aware of this, gap we have still as emerging economies and developed countries, because with crypto we can bridge that gap, to a big extent. I think governments as such and monetary policies of governments shall not matter after 2030. I think if you want to opt out from inflation, you should be able to do so. And crypto can be a tool for this, So that's my big message at the end.
That was a great big message to end on, end this off with. Jana, thank you so much for coming on to Letters from a Contrarian.
Thank you for having me, Eugene. It was a pleasure.